Major economic indicators. Now, these are the categories for the major economic indicators. The central banks use these indicators to get an overall picture of how bad or how good the economy is doing. Okay, now let's take a look at these indicators. First, we have production, and this refers to anything that the country makes. Through these indicators, the central bank can see whether the country is being productive or not. And examples of production indicators are PMI, the Philly Fed Index, etc. These indicators are used by the central banks to gain an understanding of how well the country is producing. This will give the central bank an idea of the level of production in a country. Okay, and this contributes to the overall view that the central bank has of the economy. Now we have geopolitical indicators, and these are also important. These are non-economic things that can cause risk in the markets. For example, change in government, wars. Okay, these are things that are non-economical that can cause risk in the market. Okay, so the central banks has to pay attention to geopolitical news. Now, employment. Now, this refers to how many persons are employed or unemployed. The indicators that fall under this category measure the level of employment in a country. And examples of employment indicators are the non-farm payrolls, and we will discuss this further on in the course. We have the non-farm payrolls, and we have jobless claims. Okay, these are two examples of employment indicators. And the federal bank and all central banks pay attention to employment data so they can gain an overall perspective of the economy. Okay, now we also have growth indicators, and an example of a growth indicator is GDP, gross domestic product. And these measure growth in a country. Okay, is the country growing? Is there an overall increase in production, or is there a decrease in production? And we also have inflation, and an example of an economic indicator that falls under the category of inflation is CPI. And that is a consumer price index. And this simply measures how the cost of goods and services are moving. And this is extremely important because inflation is the main mandate of most central banks. Okay, so this indicator is extremely important. And as a Forex trader, it can be extremely lucrative trading the CPI economic indicator.